This is the fifth lecture of the chapter Financial Statements of Companies. So in this lecture, we will discuss non-current liabilities under equity and liabilities. So under non-current liabilities, we have 4 items and we will discuss all these. So before discussing these items, first let's understand what is non-current liabilities and how to classify liabilities as non-current and current. So let's discuss that first and then come to these items. To classify assets or liabilities as current and non-current, we should first understand what is operating cycle. So first let's understand what is operating cycle. An operating cycle is the time frame or time period between the acquisition of assets for processing and their realization in cash or cash equivalents. So operating cycle means the time period or time frame between acquisition of these assets and their realization in cash or cash equivalents. So this time period is known as operating cycle. So I'll explain this in detail with some example. Let's say this is a furniture manufacturing company and we are going to find out the operating cycle of this furniture manufacturing company. We know that operating cycle is the time frame or time period between the acquisition of assets for processing and their realization in cash or cash equivalents. So here for this furniture manufacturing company, acquisition of assets is purchase of raw materials. So for furniture manufacturing company, the acquisition of assets for processing is purchase of raw materials which is required for producing furniture. So here for this company, the raw materials will be the wood required for producing furniture. I have added a picture of wood logs. So this will be the raw material for producing furniture. And first step, that is the first step in the operating cycle, is purchase of raw materials, that is acquisition of assets for processing. So this will be the first step done by our furniture manufacturing company, that is purchase of raw materials. So this will be taken as this purchase of raw material, this will be done at the first day. So this will be taken as day 1. Now after purchase of raw materials, the manufacturing company will start its manufacturing process. That is, it will start producing furnitures. So the production process starts next. And let's say this manufacturing started on day, let's say day 50. And on day 200, the company has finished its manufacturing process and produced a furniture. That is this one. So on day 200, a finished good is ready for sale. For about 100 days, no one bought this furniture, and on day 300, some customer came and bought this furniture. So the sale happened on day 300, and this sale was a credit sale. And after 100 days, our debtor made the payment. So on day 300 plus 100, 400. So on day 400, our debtor made the payment. So on the first day, purchase of raw materials happened, and after purchase of raw materials, for about 50 days, these raw materials were in the company as it is. And on day 50, the company started manufacturing. That is, manufacturing process has started on day 50, and it took about 150 days for the manufacturing process to produce a good furniture. So on day 200, finished good was ready, and it took about 100 days for sale to happen. So on day 300, the finished good or the furniture has been sold, and the sale was a credit sale. After 100 days, our debtor made the payment, that is 300 plus 100, 400. So on day 400, we received cash. Now we can illustrate the different operations done by the furniture manufacturing company like this. That is, first, company purchases raw materials by paying cash. So first step is purchase of raw materials by paying cash by the company, and the next process is manufacturing of raw materials. So here manufacturing process happens. So these raw materials are converted into finished goods through manufacturing process, and after finished goods are ready, what happens is this finished goods are converted into debtors or receivables. How? Through credit sale. And after converting this finished goods into debtors, what happens is these debtors are converted into cash. How? This debtors will make the payment, or the company will collect the money from debtors. So through collection, these debtors are converted into cash, and this cycle is known as operating cycle, and this process does not stop, it continues. And if you ask what is the operating cycle of this furniture manufacturing company, we can say that 400 days is the operating cycle of this furniture manufacturing company. How? We have already learned that an operating cycle is the time period or time between acquisition of assets for processing and their realization in cash or cash equivalents. So here for this furniture manufacturing company, the acquisition of assets for processing part is purchase of raw materials. So from this purchase of raw materials to realization of this raw materials in cash or cash equivalents, this time frame, this time period, this is 400 days. So this is called the operating cycle of this furniture manufacturing company. So what is an operating cycle? An operating cycle is the time between acquisition of assets for processing and realization of these acquired assets into cash or cash equivalents. So this is known as operating cycle. So I hope you have understood what is operating cycle. And one more point you should keep in mind is, if the company is not able to identify the operating cycle, then we should consider or assume that the operating cycle of the company is 12 months. So if the company is not able to identify the operating cycle, then it is assumed that the operating cycle of the company is 12 months. If the company is able to identify the operating cycle like this, then we can consider this as the operating cycle. But if the company is unable to identify the operating cycle, then it is assumed that 12 months is the operating cycle or duration. So by this we have learned what is operating cycle. Now let's see what are the different criterias or conditions which should be fulfilled to classify liabilities into current. A liability shall be classified as current when it satisfies any of the following criteria. So first one, it is expected to be settled in the company's normal operating cycle. So if any liability which is expected to be settled in the company's normal operating cycle, then it is classified as current liability. For example, if a company's operating cycle is, let's say, 200 days, then if there is any liability which is expected to be settled within this 200 days, then it is classified as current liability. Now next one is, it is held primarily for the purpose of being traded. That is, if any liability within the company which is primarily held for the purpose of trading, then that liability should be classified as current liability. And next one is, it is due to be settled within 12 months after the reporting date. That is, if the company has any liability which has reported, let's say on the date 31st March 2019 while preparing the balance sheet. So we have reported a liability on 31st March 2019, and if this liability is due to be settled within 12 months after this reporting date, that is, let's say if this liability, let's take X as liability. So if this X is due to be settled within 12 months, that is, if this X liability can be settled before the next reporting date, that is next year, within 12 months. So let's say 31st March 2020. So within this date, if this liability is due to be settled, then this can be classified as current liability. So it is due, or if the liability is due to be settled within 12 months after the reporting date, can be classified as, or should be classified as, current liability. And in the first point, you may have one doubt, that is, what if the company's normal operating cycle is more than 12 months? That is, let's see, if the company's normal operating cycle is 400 days, and if there is any liability which is due to be settled not within 12 months, or which is due to be settled on, let's say, on 396th day. So let's say X is a liability and which is due to be settled on 396th day. That is, it is more than 1 year, more than 12 months, and it is within 400 days, that is within company's normal operating cycle. So this liability can or shall be classified as current, even though it is more than 12 months. Why? Because this liability is due to be settled within the company's normal operating cycle, that is 400 days. So we can classify, or we shall classify this liability as current. Now let's move on to this point. The company does not have an unconditional right to defer settlement of the liability for at least 12 months after the reporting date. That is, if the company does not have an unconditional right. What is unconditional right? Unconditional right is the right which does not have any conditions. So if the company does not have any unconditional right to defer means postpone, right to postpone the settlement of the liability for at least 12 months after the reporting date. So if a liability is reported on 31st March 2019, then if the company does not have an unconditional right to postpone this settlement of this liability for at least 12 months, that is not more than 12 months. If the company does not have an unconditional right to postpone this liability more than 12 months, then this liability can be classified as current liability. So if the company has to settle this liability within 12 months, that is before 31st March 2020, and if the company does not have an unconditional right to postpone this settlement date more than 12 months, if there is no unconditional right with the company to postpone this settlement date more than 12 months, then we can classify this liability as current liability. Terms of a liability that could, at the option of the counterparty, result in its settlement by the issue of equity instruments do not affect its classification. That is, if a liability has any term saying that it can be converted into equity as a settlement, then this won't affect the classification of liability as current or non-current. That is, if there is any term saying that this liability can be converted into equity as a settlement, if there is any term like that, then this won't affect the classification of liability as current or non-current. Only if the settlement is by conversion into equity or by issue of equity instruments. So a liability to be classified as current, it should satisfy any of these criteria. and those liabilities which are not current liabilities shall be classified as non-current liabilities. So now you know how to classify a liability into current and non-current. Let's come back to our main discussion. So under non-current liabilities, we have 4 items. First one is long-term borrowings, and next deferred tax liabilities net figure. Next one, other long-term liabilities, and last item under non-current liabilities is long-term provisions. So these are the items under non-current liabilities. And for all these items we have notes to accounts as well. So in the next video we will discuss notes to accounts for each of these items.